Let's take a look at some charts on Stellar from this week's article on Brave New Coin. So I'll start with the market cap like I usually do, and I'll give my usual caveat for 100% pre-mined coins, or coins that were created out of thin air. The market cap is really a terrible metric because you have circulating supply, and then you have the remainder of the supply held by, in this case, the Stellar Development Foundation. Now, they did burn half of the total supply late last year, so they kind of took a more aggressive approach than Ripple. Ripple was like, okay, we're going to escrow 50% of the supply because obviously it looks terrible compared to things like Bitcoin and many other projects. It's uncertainty for investors potentially, and it just shows that these are where the coins are. This is what's happening. It's in a programmatic escrow. For Stellar, they just said, you know what, we're going to burn half the supply. We're having a hard time giving it away, basically. We're having a hard time distributing it evenly, so we're just going to burn half of it. Now, you couldn't really point to that moment on the chart here as far as the market cap. Again, it was non-circulating, but as a whole, the market wasn't like, okay, great. You know, it was somewhere back here, November, December. I forget the exact date, but it was late 2019 when they decided to burn half the supply, non-circulating supply. So it's hard to really take market cap for any of this stuff seriously because they're just slow dripping supply into the marketplace, sort of in the hopes of buying demand will keep pace. But at the end of the day, most of the activity on Ripple and Stellar isn't economic utility, it's just speculation. Both projects have partnerships upon partnerships. Both projects are trying to sort of connect banks and people and businesses and interoperability, and they're kind of on all the bandwagons as far as exchanges and DeFi and trying to do ICOs, but neither of them sort of have their own identity amongst other crypto identities. They're not proof of stake anymore. They're not privacy. So it's hard to want to invest in a project like that over a long period of time. Now, they can be great for speculation. I'll get to it at the end of the video. Charts look great from a technical perspective, but the fundamentals, yes, they're updating the code regularly, just like Ripple, but do they need a coin at the end of the day, like Ripple? I don't think so, honestly. It's a great protocol. It does stuff. Awesome. Doesn't need a token, doesn't need a coin. Probably not. If we look at the total supply that has been released, you can see there was a bunch of partnerships with blockchain.com, Keybase, a few others. It sort of increased the total holders, helped distribute the coin, but it's kind of plateaued over the past year, especially as far as holders and supply circulating. I mean, as a long-term investor, I just don't want to see any one party control 50% of the total supply available. That's the same for Link, that's the same for Ripple, that's the same for any pre-mine, any ICO. It can be dumped at any time, it can be sold at any time. It's got years upon years of distribution left, so it's just hard to take it seriously. If we compare Ripple and Stellar directly on a few metrics here, they're about even on fees and transactions per day, and Stellar leads in active addresses and GitHub commits. This is total GitHub commits, not just the main repo. You can see the massive imbalance here in market cap, which is likely due to the circulating supply weirdness, right? Like, yes, they have a bunch of circulating supply. They both do. I don't know. Like, does it even matter? You know, like, to me, market cap for either of these is just a silly metric to even talk about. And total daily transaction volume is much greater for Ripple compared to Stellar, even though a Cornell study found in May this year that 94% of the transactions on Ripple are not economic utility. It's just sort of data. If we look at the fees directly between Stellar and Ripple, Stellar has sort of caught up to Ripple's fees. Stellar had been much cheaper, but as Stellar gets more use, more on-chain activity, you sort of expect fees to go up. And I mean, this is like nothing. This is the lowest fees of anything that has fees, basically. If we're talking about Tron or EOS, where there's basically no fee, I mean, you can't even compare them to this. But when you compare this to like Ethereum and Ripple, or Ethereum and Bitcoin, obviously it's basically free, right? Look at the transaction counts in the millions, 1.2 million, 800,000, something like that for Stellar. There's definitely some weirdness here in that when you get this stereotypical spikes or what looks like a ceiling with significant drops, like that's not, I wouldn't consider that organic, like people activity. That's some sort of, that's other activity. I don't know, non-economic or bots, or I wouldn't say spam. There's obviously something going on here, but it just, you don't see this on networks that have like persistent, continued organic activity. This, I think, was the inflation rewards being distributed. I don't know what this was or is, and it looks more normal here than it did here. You can see it clearly hit some sort of ceiling and broke that ceiling and then sort of acted normal again. Transaction sizes haven't really changed much since 2018. This big spike was when they burned the token supply, so they had to actually move it to a different address, 55 billion tokens, I believe it was, to a different address, so that'll spike any on-chain metrics at that time. If you look at the 30-day active addresses and the NVT, which is an inverse metric of economic utility, here's that spike down again. So this is all sort of a false positive for NVT in that this was just the pre-mine moving on-chain. So you have to throw this out of the data, basically. It's not economic utility. It's not people using the chain. Even still, NVT continues to decline, similar to Ripple in that there is a multi-year decline in NVT, a trend line. And it's hard to read that and know what that means, because if you look at Ethereum and Bitcoin, they have a rising trend line on their NVT. And my guess is it has something to do with the proof of work versus pre-mine. You'd have to dig into the math, but I'm assuming the inflation isn't accounted for Bitcoin and Ethereum, whereas here there's some sort of weird anti-inflation going on. But nonetheless, it's declining. So in a vacuum, it's bullish. Just hard to know how bullish that really is. The active addresses, again, these like spikes, this is a 30-day chart. So this is even like smoothed out. And you're still getting spikes in active addresses, even though the inflation rewards are done. So they ended that late last year as well. So I don't know what that's about. But active addresses have declined since beginning of 2019. Definitely not something you want to see if you're bullish. You want to see this picture from 2017 to 2019, peaks, valleys, whatever. But in general, there's a trend line. Active addresses are increasing. Now they're sort of plateaued and are declining. If you look at GitHub commits, like I said, they're pretty active on the coding. So they're releasing updates very frequently, which is both good and bad. You certainly want to see code updated regularly. It's just hard from a node perspective to get the nodes on board, because any average person who isn't deeply connected with the community is going to have hard time like updating their node every few months. Even my own Bitcoin node, I lag on updating every so often just because I don't realize that it needs to be done, or I just forget about it. You know, most people aren't paying attention to node updates on a day-to-day basis, right? Which is one reason why you want to sort of ossify that layer one node. And kind of Bitcoin does this maybe better than most because it's just slow to release updates. The updates are purposeful and meaningful and tested thoroughly. But a lot of people argue, okay, we need to stop updating the nodes and just update layer 2 now, because the more updates you get, the more variations in the nodes you get. And that has trouble down the line with decentralization and bugs and security risk, because if percentages of the network aren't updated to the latest patch, then all those previous nodes are vulnerable, just like any software. But they're definitely updating very regularly. If we look at Google Trends, basically just like Ripple, just flat over the past 2 years. You know, I've been looking, each month I update these articles, right? And I look for news. What can I find? What can I talk about? What's interesting? There's usually a lot of junk. There's usually something to talk about, but for this Ripple article or this Stellar article, there's kind of nothing over the past month that I could see that was super important to include or talk about. Google Trends reflects that. And this is just zoomed in over the past 2 years, basically just flat. And this is specifically Stellar, the protocol, not just like Stellar, the word, because if you try to pull that up, you'll get all sorts of stuff. This is convincingly Stellar, the coin to me, because it spiked just like everything else did in 2017. If you look at technicals, 5,200 EMAs, VPVR, yearly pivots, and RSI, all the usual suspects here. This is the daily Poloniex chart. And since mid-2018, this 5,200 cross has been bearish. This year, it finally crossed bullish. Massive, massive trend shift, considering how long this has been bearish. So from that perspective, it is bull, baby bull, right? It's even got this inverted head and shoulders thing with a neckline at 06, 08, whatever this is, that's been broken. So it's doing all the bull things. It's breaking the bull trend, breaking the bear trend. It's consolidated for 8 months plus, broke above the consolidation. So you expect bullish continuation here. You expect retests of the mean at the 200, retests of this yearly pivot, retests of this VPVR, new volume that's appeared. You can see there was another inverted head and shoulders here that failed to break up. Shoulder, head, shoulder, neckline. So that's the next target, sort of 0.13, this yearly pivot, all this volume up here. That's the next place you'd expect to pause before more to the upside. But overall, this looks great. There's no bear divs or anything on RSI. And then the downside is just, there's so much volume down here that I have a hard time believing it'll get past 04 for any long extended period of time if this does just collapse to nothing. Cloud loves it. This is a 2-day cloud. I like to zoom out when there's a lot of noise and it's just been a long trend, just to be even more convinced that, all right, if it's been below the 2-day cloud since 2018 and it's finally above the 2-day cloud, okay, this is the real deal, right? There's no fake outs here. We are bullish sort of based on extremely high metrics here, averages on the cloud. So it's been bullish since May. The Kijun support, just like the 200 EMA, is around 0.85. I think the 200 is a little lower, 0.75, something like that. So that's a nice rebuy zone for the trend. But overall, this looks great on cloud on the 2-day. And if we look at the weekly Stellar BTC cloud, it's setting up for this edge-to-edge trade from sort of 1K sats to 2K sats, 2,500 sats into 2021. You know, this is a weekly chart, so it's a high time frame. It's going to take a long time for this to actually pan out. But to get this bullish TK cross below the cloud, that's the first sign that, okay, that again, this bear trend is over. It's dropped, it's consolidated, and the averages have all reset. It's a bit far from the edge-to-edge trigger even. You know, we're not talking this won't trigger until 2021, mid-2021 maybe, if this just remains sideways. But it's something to watch for going forward. You can see it had the Adam and Eve. It's like extended Adam and Eve. It had this Wyckofian thing, accumulation period, tried to break up, found resistance at the Kijun, like it typically does. And now it's just chilling. And like I show here, there's some sort of tight triangle going on here. You can see that here as well. But this looks more bullish than bearish. It's definitely not convincingly longable yet until it's into the cloud on this weekly time frame. But it definitely says hold your roll on the shorting because the trend is sort of flattened and reset. So if I'm looking for a short, I'm looking for this TK cross to recross bearish. And that's the cue that, okay, now the short should be good. Again, the issue with that is you're going to run into support at 500 to 600 sats at the previous lows. So just something to be mindful of. Okay, I'm at 860. My downside is 500, 550, something like that. Think about closing some down there and then reopening a short potentially at new lows. Looking at the daily though, it does look pretty bullish. I mean, it's above the 200 EMA clearly. It's sitting at the previous resistance. So this was a year-long accumulation period of just sideways. It's got like head and shoulders things. It's got W double bottom things. It's got Wyckoff things. It's got all sorts of things. None of this was bearish, right? Like it's all just accumulation. Broke up, returned to previous horizontal resistance, which is now support. And now it's got a decision to make soon as the triangle is near completion. I don't expect this to die below 700 sats just because of the volume here again. That's another knock for reshorting this, is that, okay, we keep shorting it into support, right? So it's like, what's my downside here? 700 sats, then what? 550? You know, so it's hard to convincingly short this until it breaks new lows. Something else you can watch for is this sort of ascending trend line here. That's also going to hit support if this breaks down. So do nothing for Stellar BTC might just be the move here. But overall, the USD metrics look bullish. Fundamentals look kind of in the middle, medium. And Stellar BTC looks the most bullish it's looked in 2 years, certainly. But it's not exactly mega bull as the trend begins to shift.